Hey, ladies and gentlemen, today's video is part 2 of a 3-part series that's serving to help us understand the basic design as well as the basic use of the TraderTargets model. In this video, we seek to understand the design of the targets themselves and look at some key terms that we've been discussing to give you a deeper insight, which will allow you to make some good decisions and even using it with your existing strategies. We've looked at some basic concepts, such as when price gets under a bearish cloud, you're going to look to start going into target 1 and target 2, asking yourself, what is the probability of meeting target 3 or even getting into the hysteria level? We want to go deeper into the design, discuss how TraderTargets is more than a pivot point model, and begin to define what we mean and how you can use what TraderTargets reveals about the trend or momentum or volatility in enhancing your strategy that you're currently using. TraderTargets is considered a leading indicator because it plots price into the future, estimating where price should arrive before the day begins trading. Leading indicators are the opposite of lagging indicators, such as simple moving averages. But to be clear, the TraderTargets model draws or plots these particular target values at the end of each day and the opening of the session that we're heading into. So these plots that you're looking at on the right-hand side of the screen were made at the beginning of this session. There are an array of leading indicators on the market. For example, RSI is a leading indicator, and leading indicators can be very helpful, but it's very important to watch their performance value as well as manage your risk. Trend, in its simplest terms, is nothing more than the direction of price movement across a given time. We've highlighted on the screen a 1, 2, 3, and 4-day trend. Are we making higher highs and higher lows, or lower highs and lower lows? The TraderTargets model is shown on a multi-day chart, normally the 10-day 1 hour, to reveal first the interim historic trend, lower lows, lower highs, or higher highs, lower lows. For example, this was an uptrend. We've had a shift to a downtrend. It also reveals the plots that it's calculating for the future trend of the upcoming day or session. And this can be a trend continuation or a trend shift. When today began, we had a red cloud. It was indicating a continued bearish bias down. And with this bearish bias down, we would expect a continuation in this current trend. The future or projected trend is represented by both the color of the CHOP SR cloud and the relationship of that cloud being above or below the previous day. For example, today we had a red cloud, and this red cloud was lower than yesterday's red cloud. This would be an indication of a continued bearish bias. And within this bearish bias, you would wait for price to confirm what you identify as the trend direction for the day, and then trade into those targets. As a note, you should always look at where the target levels are in relation to past days. Are the targets themselves making higher highs or higher lows? Is the low side of the targets flat, or are they higher or lower than the past lows? Much like the candlestick traders we have who are looking for inside days or outside days, looking for expansion and contraction, some of these targets in relation to past days can indicate whether or not you are simply in a pullback within a larger trend, or if you're actually seeing a trend shift, seeing something roll over. Momentum can refer to trend strength or how one-sided the market is. For example, in making those higher highs and higher lows, a bull trend is comprised of more bullish closes or bullish candles than bearish candles, and momentum is considered strong in the bullish direction when comparing its open to previous closes. So here we had a 1, 2, 3, 4-day bullish uptrend. Momentum was strong, even though it did weaken right there for a brief period of time. And then we saw some bearish momentum, which the bulls could not recover, and then you started this downtrend. Now, is this rolling over? Is this a pullback? We're going to look at some ways that we may see that. Momentum and trend really go hand in hand because, again, momentum is trend strength. The CHOP SR cloud was introduced when we were talking about trend, but the CHOP SR cloud reveals momentum by its color and its size. You'll notice that this cloud is not quite as big as that cloud, and this cloud is certainly much smaller than these two clouds combined. A green CHOP SR cloud expects a stronger bullish presence, while a red CHOP SR cloud expects a stronger bearish presence. In an uptrend where you're making higher highs and higher lows, and you have a green CHOP SR cloud, you would expect bulls to defend a specific level and for the trend to continue. However, a red CHOP SR cloud tells you that the bears are growing stronger, and you would expect either a bearish resistance providing a small pullback in the trend, or this may be the beginning of something rolling over. The second criteria beyond color is thickness. The thickness of the CHOP SR cloud shows that momentum is decreasing or increasing, and this often leads to a multi-day trend or multi-day range contraction or expansion. A thick CHOP SR cloud anticipates a strong defense of yesterday's move, and it cautions traders who are tempted to take an anti-trend trade. For example, a thick red momentum cloud after a series of green or bullish clouds in the trend direction shows that momentum has ceased. Now, this can be a brief pullback before a continuation in the trend direction, or it can be a clue that a reversal or range-bound market is starting to happen. A good example of using momentum and understanding the thickness of the cloud occurs in this section right here, which began a 4-day uptrend. There was a bearish presence, or there was a drop in momentum in a larger uptrend. Price broke through, and on the next day, there was a fairly strong bullish momentum. Price came back to the magnet area, which it normally does, into the CHOP SR cloud, and then began moving higher. However, there was a warning at this juncture here, warning that there was bullish momentum, but it was very weak. Fortunately for the bulls, price ran up, and the next cloud said momentum is strong. There's good support here. It was proven, and it continued higher. As price began to roll over at this area, we saw a 4-day uptrend end. This was indicating that momentum was lost. And in fact, when we compare the two clouds, there was quite a bit more bearish or resistance taking place than the previous day. And in this instance, instead of leading to a 1 or 2 day pullback, it has started a 3-day downtrend. The TraderTarget model also analyzes volatility. Now, volatility is the standard range or deviation from a mean within a specific time period. This is why TraderTarget plots the CHOP SR cloud as a price mean or a magnet location. So it not only helps us identify trend, and it not only tells us something about momentum, but it is a magnet location. This is why on the vast majority of days, price will revert to and test or try to break through the CHOP SR cloud. The TraderTargets model plots the CHOP SR cloud as the price mean or magnet location. The targets themselves are adjusted for increasing and decreasing volatility day over day. Adjusting for volatility and momentum are critically important to producing valid targets. And this is why the TraderTargets model looks very different than all other pivot point models that we know of that are available on the market. Practically speaking, when looking at volatility, you're going to look at today's targets in relation to yesterday's targets and notice whether the targets are getting farther apart or closer together. So as you look at today's targets, Are they smaller? Are they contracting when judged by yesterday's targets and even the day before? Well, we see here that you're making lower highs. There is a contraction, but the bulls are remaining pretty strong because the lower targets are remaining flat. But when we judge this, this tells us that there is a contraction taking place, but the bearish momentum is not as strong as maybe one would expect for a reversal. Secondly, determine if the targets are continuing in the same direction. Are you making higher highs and higher lows? We saw some higher lows here, and then certainly it picked up higher lows, as well as a little bit of a lower high there. You saw a contraction, but after that, you started making higher highs. And this mixed with green momentum was a good sign that you would continue to see upside movement versus there was a shift that happened here. You can also look for the distance between the targets and the cloud because one side is going to be weighted. If you'll look really hard, you'll notice that the distance between this bearish cloud and target 1 is quite different than the cloud and the bullish side targets. The TraderTargets model does weight the bearish and bullish side when determining momentum and volatility to plot the price targets. We hope you can appreciate that TraderTargets is classed as a leading indicator, a proprietary model that's based on pivot point theory that also examines trend, momentum, and volatility to plot its daily targets. We hope that what you've learned here will not only help you trade the TraderTargets model, but incorporate it into your existing strategy to enhance what you're already doing.